Hey everyone, welcome back to We Are Cosmic, your go-to channel where we dive deep into the world of finance and cryptocurrencies. Today we are talking about something truly groundbreaking, something that could redefine the way wealth moves around the globe. If you think you understand XRP or digital assets or even gold, stick with me, because what I'm about to explain is going to change your perspective forever. For decades, the financial world has been divided. On one side, we have gold, the $11 trillion powerhouse of global wealth. It's a physical, secure asset that has been trusted for centuries. But there's a problem. Gold is slow. Moving it from one place to another takes time, security, and effort. On the other side, we have the digital world, where value moves almost instantly, but it often lacks the tangible trust that comes with something like gold. Now, most people see XRP news and think about price changes, partnerships, or technology updates. That's just the surface. But if you look deeper, what's happening is historic. The XRP ledger is no longer just a network to move money quickly. It is becoming the bridge between the world's most trusted physical asset, gold, and the fast-moving digital economy. Imagine combining the stability of gold with the speed of digital transactions. That's exactly what's happening. This is more than a tech upgrade. It's a fundamental shift in finance. The total cryptocurrency market cap is around $3 trillion, while the value of all gold above ground is $11 trillion. By connecting gold to the XRP ledger, we are unlocking a pool of value almost 4 times bigger than the entire crypto market. And the best part? We are finally solving a problem that has existed for centuries, the friction of moving physical gold. Right now, transporting gold is a logistical nightmare. Armored trucks, high-security vaults, and days of verification make it slow and expensive. But when gold is tokenized on the XRP ledger, it becomes weightless. You could send a gold-backed transaction across the world as easily as sending a text message. This is not hype, this is a real transformation. The creator of this initiative didn't say epic lightly. When you merge the oldest form of money with the fastest settlement layer in existence, you change the very definition of liquidity. Gold is no longer just a static store of value. It becomes programmable, fractionable, and liquid. That means you could technically buy a fraction of a gold bar, use it as collateral, or transfer it instantly across borders, all on the XRP ledger. This is where the XRP ledger steps out of the shadow of speculation. For years, people judged it mainly by its price swings. But now, the ledger is moving into a utility-driven era. Every bar of gold that is traded or leveraged on this network creates real activity and real demand for the native token XRP. And this isn't just for small investors, it's designed for institutional-grade operations capable of handling trillions of dollars in real-world assets. Traditional gold transfers take 3 to 5 business days. On the XRP ledger, it happens in 3 to 5 seconds. That's a 99% efficiency gain, a spark that validates the network as a serious financial engine. For holders and investors, this isn't just exciting, it's historic. We are moving into a world where the old friction of physical assets meets the speed and transparency of digital finance. So, if you've ever wondered how XRP could truly revolutionize money, assets, and wealth, you're in the right place. Over the next few minutes, I'm going to show you how the XRP ledger is becoming the backbone for a new financial world, how gold is finally going digital, and why this is a massive opportunity that the average investor is just beginning to understand. Now that we understand why the XRP ledger is more than just a fast payment network, let's explore how it actually turns physical gold into a liquid digital asset. This is where the concept of tokenization comes into play. Tokenization is the process of creating a digital twin of a physical asset, in this case gold, on a blockchain. Each token represents a real gram of gold, physically stored, audited, and insured. That means every transaction on the ledger corresponds to a real, tangible asset, not just a promise or paper certificate. This marks the birth of the real-world asset RWA economy, and XRP is at the forefront. By moving gold onto the ledger, we make it programmable, fractionable, and instantly transferable. No longer do you need to buy a whole bar or wait days for settlement. On the XRP ledger, you can buy fractions of a bar, send it across the globe in seconds, or use it as collateral in decentralized finance protocols. The scale of this opportunity is massive. The RWA market is projected to grow to $30 trillion by 2030, with tokenized commodities like gold leading the charge. This means the XRP ledger has the potential to absorb trillions of dollars in previously illiquid assets, transforming the way global wealth is stored and transferred. The network is moving from static wealth to active wealth, where every asset can work for you rather than just sit in a vault. Traditional gold settlement is slow and expensive. Banks need 3 to 5 business days to process a transfer, with high fees for storage and verification. On the XRP ledger, the same transaction takes 3 to 5 seconds with minimal cost. This efficiency isn't just about speed, it fundamentally changes the economics of gold. Gold can now generate yield, participate in loans, or provide liquidity without leaving the safety of its digital representation. But tokenization alone isn't enough. To make gold functional in a global financial system, it needs an engine, a marketplace, and liquidity. The XRP ledger comes with all of this built in. Unlike many other blockchains that rely on third-party smart contracts or apps, XRP has a decentralized exchange, DEX baked into the protocol, along with automated market makers, AMMs. This means that tokenized gold doesn't sit idle. It can be instantly traded, swapped, or bridged to other currencies or assets. The integration of DEX and AMM is crucial for institutional adoption. Imagine a global bank wanting to trade gold for euros or stablecoins. The XRP ledger automatically finds the most efficient path, bridging the transaction through XRP or other assets if needed. The ledger handles multi-trillion-dollar liquidity flows seamlessly, ensuring that institutional players don't face bottlenecks or delays. Another important point: this system is compliant with international banking standards. Tokenized gold on XRP supports AML, anti-money laundering, and KYC, Know Your Customer regulations, along with built-in freeze and clawback capabilities. This makes it safe for institutions to participate without risking regulatory violations. And here's the magic. By embedding verification into the protocol, XRP eliminates the risk of the paper gold problem. For decades, most gold in the market existed only as a certificate or contract, not physically in a vault. This created a fractional reserve system that could collapse if too many holders demanded real delivery. With tokenized gold on XRP, every token is backed 1.1 by real gold, verified by decentralized oracles. No fake claims, no ghost supply. The proof of reserve ensures transparency that traditional audits can't match. For years, cryptocurrencies have been largely speculative, but tokenized gold is a game changer because it's an asset that banks, hedge funds, and financial institutions already understand and trust. A gold bar is familiar, a volatile meme coin is not. By putting gold on a ledger, XRP effectively provides a Trojan horse for traditional finance, bringing trillions of dollars into the blockchain world without requiring institutions to take speculative risks. The arrival of tokenized gold on XRP is attracting serious attention. Banks like HSBC and Ripple's institutional partners are exploring this space not because they want crypto, but because they need faster, more efficient ways to move and settle assets. Traditional banking systems take days to process transactions, require multiple intermediaries, and charge high fees. XRP changes all of this. Transfers that once took 3 to 5 business days now settle in seconds, creating a 24/7 global financial network. This influx of institutional capital has created what I call a liquidity black hole. Gold on XRP doesn't sit idle. Through decentralized exchanges, DXs, and automated market makers, AMMs, every token becomes part of a high-velocity ecosystem. Institutions can trade, lend, or use tokenized gold as collateral, turning a previously static asset into a productive financial tool. Think of it this way. In the traditional gold market, the asset sits in a vault, incurring storage and insurance costs. On XRP, the same gold can earn 2 to 5% APY through lending protocols while remaining fully backed by the real physical asset. That is a radical shift in how we think about wealth. Gold is no longer just a store of value. It's a working asset in a global digital economy. But for this system to function at scale, XRP itself becomes indispensable. Why? Because gold on the ledger needs a bridge to move across currencies, platforms, and other assets. If you want to trade gold for euros, yen, or even another crypto, you need a universal liquidity asset. That's XRP's role. XRP acts as the mathematical lubricant that keeps the $11 trillion gold engine running. Every transaction on the ledger uses a tiny amount of XRP for settlement. As more gold and other real-world assets move onto the ledger, the demand for XRP naturally increases, independent of speculation or retail hype. It becomes a self-sustaining cycle. Gold brings the value, XRP enables the movement, and the ecosystem grows stronger with every transaction. The ledger's pathfinding algorithm ensures every transaction finds the most efficient route, often through XRP, minimizing costs and delays. This makes the network ideal for high-volume, institutional-scale movements. Unlike other blockchains that rely on complex smart contracts, XRP's built-in DEX and AMM infrastructure provide a secure, reliable, and fast settlement layer for trillions of dollars of assets. Institutional adoption isn't just about efficiency, it's about trust and transparency. The XRP ledger's regulatory-friendly design allows institutions to tokenize gold and other assets while complying with AML and KYC regulations worldwide. This is something no other blockchain currently offers at the same scale. The arrival of these institutions creates a network effect. As more high-value assets migrate to the XRP ledger, the ecosystem grows, liquidity deepens, and the system becomes more robust. Every new asset added reinforces the value of XRP as the bridge currency, cementing its role in a multi-trillion-dollar financial system. As we move trillions of dollars in gold and other real-world assets onto the XRP ledger, one critical topic comes into play: security. This isn't just about protecting speculative tokens anymore. We are talking about digital representations of real, tangible wealth. The stakes are higher than ever, and traditional approaches to custody are no longer enough. In the old system, a single point of failure, like a hacked wallet, a compromised exchange, or a lost private key, could wipe out your wealth. In the XRP ecosystem, sophisticated investors and institutions understand that true security comes from redundancy. That means spreading your assets across multiple layers to ensure that no single event can destroy your holdings. A practical strategy often recommended by experts is the three-tier custody model: 40% in institutional-grade cold storage for long-term holdings. This is the safest layer, completely offline and secured against hacks or cyber attacks. 40% spread across at least 2 high-liquidity exchanges. This ensures your assets are accessible for active management or trading without relying on a single platform. 20% in hot wallets for immediate network use, such as payments or protocol interactions. This layer allows you to interact with the XRP ledger without exposing the majority of your wealth to online risks. This redundancy strategy is essential in a multi-trillion-dollar ecosystem. Imagine a scenario where one exchange goes offline during a major market move or regulatory shift. If you haven't diversified, your wealth could be frozen and opportunities lost. By distributing assets intelligently, you create resilience against hacks, downtime, or sudden changes in market conditions. Security in this ecosystem also isn't just technical, it's procedural. Investors need to verify exchanges, maintain multiple accounts, and ensure they have secure backups of private keys. In the digital age, access management is as important as ownership itself. Even the most advanced blockchain cannot protect you from poor custody practices. The next layer of security comes from the protocol itself. The XRP ledger's design includes built-in governance and amendment processes. New features, such as lending protocols or additional real-world asset support, are voted on by the community and validators, creating a consensus-driven safety mechanism. This ensures that the network evolves in a controlled, secure manner, even as trillions in value are added. Another key point is understanding the role of XRP as the bridge asset. Every transaction on the ledger requires a small amount of XRP. This isn't just technical detail, it's a critical mechanism that ensures liquidity and movement for gold and other tokenized assets. As more assets enter the ecosystem, XRP's utility grows, creating a natural, ongoing demand that is structurally embedded in the system. But even with protocol-level security, investor behavior matters. You must have a Plan B and Plan C. Test your multiple exchanges, hot wallets, and cold storage setups before high-volatility events occur. In the digital asset space, redundancy is the only form of true insurance. Those who wait until a market spike to prepare often miss opportunities or face losses. Finally, the broader lesson here is that the XRP ledger combines institutional-grade infrastructure with practical, real-world investor strategies. Security isn't just about technology, it's about understanding the flow of assets, the role of redundancy, and the utility of XRP as a bridge. Those who implement these principles position themselves not just to survive volatility, but to thrive in the new financial ecosystem. With gold represented as a digital asset, it can move instantly, be fractioned into smaller units, and integrated into lending and liquidity protocols. This is where the concept of the velocity of gold comes into play. Once an asset becomes liquid, it stops sitting idle. and starts generating economic activity. Tokenized gold can now settle transactions in seconds, serve as collateral in decentralized loans, or provide liquidity to automated market makers, all while remaining fully backed by real physical gold. This new financial environment creates a feedback loop. The faster gold moves, the more demand it generates for network liquidity and the XRP token itself. XRP acts as the bridge that allows these trillions of dollars in value to move efficiently across currencies, assets, and markets. Every gold-backed transaction reinforces the network, creating a self-sustaining system of utility and value. The economic implications are enormous. For the first time, gold is no longer just a hedge against inflation or a long-term savings vehicle. It becomes a productive asset. Through lending protocols on the ledger, investors can earn an annual yield of 2 to 5% on gold that would otherwise sit dormant in a vault. That transforms gold from a cost center into a revenue-generating asset without taking on additional counterparty risk. This increase in velocity also reshapes the macroeconomic landscape. When trillions of dollars in gold are liquid and productive, it can influence lending markets, global credit availability, and even currency dynamics. Gold becomes fuel for a decentralized credit market capable of supporting new financial products and services previously impossible in the static physical gold model. Another critical impact is the creation of a liquidity black hole. As more assets migrate to the XRP ledger, they rarely leave. Why? Because the ledger is faster, more efficient, and more transparent than the traditional system. Once institutions experience the speed and efficiency of 3 to 5 second settlements, returning to multi-day bank processes becomes unthinkable. This incentivizes further migration, deepening liquidity, and strengthening the network. The ledger's governance and amendment mechanisms further ensure stability. Features like lending protocols, decentralized exchanges, and automated market makers evolve under community and validator oversight, keeping the system secure while scaling. This combination of institutional participation, high-speed settlement, and protocol-level safety makes the XRP ledger uniquely positioned to handle trillions in real-world assets. From a practical standpoint, this also signals a shift in investment behavior. The most valuable asset in this new system isn't just gold or XRP, it's knowledge. Understanding how to safely participate, diversify custody, and leverage the ledger's protocols separates proactive investors from reactive speculators. Those who master this ecosystem early stand to capture the largest gains. Finally, tokenized gold's integration into the XRP ledger signals the end of paper gold dominance. Fractionalized paper certificates, which have long distorted the market and suppressed prices, now face competition from verifiable, fully backed digital tokens. This transparency allows the true scarcity and value of gold to be reflected in real time, aligning price with actual supply and demand. In short, the XRP ledger doesn't just make gold faster, it makes it productive, transparent, and globally liquid. The network turns a static $11 trillion asset into a dynamic engine for global finance. And the ripple effect of this transformation is only beginning to be felt across the markets, from institutional liquidity flows to everyday investor opportunities. As we wrap up this series, it's important to focus on the native token XRP and why it's the true backbone of this financial revolution. While tokenized gold draws the spotlight, XRP is what keeps the engine running. Every transaction on the ledger, whether it's gold, other real-world assets, or stablecoins, requires a tiny amount of XRP to settle. This isn't a gimmick. It's a built-in bridge mechanism that ensures liquidity, efficiency, and security across the entire system. As more gold enters the ledger, the burn rate of XRP increases, meaning each transaction slightly reduces the total supply. This deflationary dynamic is often overlooked but extremely powerful. Unlike purely speculative tokens, XRP's value is structurally tied to the volume of assets moving on the network. As trillions of dollars in tokenized gold circulate, the network's demand for XRP grows naturally, creating a self-sustaining cycle of utility and scarcity. This brings us to a critical turning point in financial history, the end of paper gold. For decades, the gold market has been dominated by certificates, contracts, and fractionalized claims far exceeding physical supply. This paper gold system has hidden true scarcity, artificially suppressed prices, and created systemic risk. The XRP ledger changes this entirely. Every tokenized gram of gold on the ledger is verifiably backed 1.1 by a physical asset stored in a vault. Decentralized oracles track reserves in real time, automatically flagging discrepancies. This level of transparency and security eliminates ghost supply and fractional reserve risks, forcing a repricing of gold's real value. Investors no longer have to trust annual audits or bank promises. They can verify the asset directly on the ledger. The implications are massive. As tokenized gold becomes more widely adopted, demand for opaque paper certificates will decline. The market is shifting from trust-based promises to proof-based ownership. This isn't just an upgrade for XRP, it's a liberation for gold itself. Physical gold is finally finding a home in the digital era, fully liquid, programmable, and globally accessible. The financial revolution doesn't stop with gold. This bridge and infrastructure are a template for all real-world assets: bonds, real estate, carbon credits, and more. Institutions are already recognizing the advantage of tokenizing assets on a ledger that settles in seconds rather than days. Every asset that moves onto XRP strengthens the network and reinforces the value of XRP as the universal bridge. For investors, understanding the system is key. The greatest wealth in this new era will not come from speculation alone. It comes from knowledge, preparedness, and strategic participation. Diversified custody, understanding lending protocols, and knowing how to leverage the ledger safely separates the proactive from the reactive. Those who act early and intelligently stand to gain the most from this massive migration of value. Ultimately, the XRP ledger is positioning itself as the gold standard of the digital economy. It's more than a blockchain. It's a comprehensive financial infrastructure. Tokenized gold proves the concept, and as trillions of dollars of real-world assets migrate, the ledger becomes a central hub for 24/7 global finance. We are witnessing a historic moment, the convergence of old-world wealth with cutting-edge technology, creating a system that is faster, more transparent, and more productive than anything that came before. XRP is the bridge, gold is the first cargo, and the future of finance is being built in real time on this ledger.